Welcome to Wise Man's Dollar, a podcast for everyday working people who want to keep more of what they earn, make wiser decisions with their money, and leave a legacy for the next generation. I'm Sunjata, and I'm so grateful that you've decided to join me for another episode. In the previous episode, I talked about my journey to becoming my own banker and just the story about how that came about. In today's episode, we're going to talk about the idea of properly structured, which is something that I've said over and over and over again when describing the asset that this whole infinite banking concept, the idea of becoming your own banker, the idea of starting a family banking system, etc. It's all built on top of a properly structured dividend paying whole life insurance policy. That is the foundation, that is the tool that functions as a bank. But the key term there, or the key words in that, are properly structured. And that's what makes the whole strategy work. So, you know, in terms of the tie-in of lessons from my granddaddy around the idea of something being properly structured. My granddaddy was a very, very structured and detail-oriented person, and he had a very stern disposition. If you can relate to having a stern grandparent, right? That was my grandfather. He was a military guy, very stern, very all about things being in order, very timely, etc. And one of the lessons that he taught me was do things right or it will cost you. Right? So if you don't structure things properly in a personal finance, context, it'll cost you. And that's, the idea of structure within this whole IBC infinite banking concept. And my granddaddy taught me that lesson at a very young age in a different way. And the way that he taught it was when I would visit my grandparents for the summer, and I broke all this down in more detail in episode one. So if you haven't seen episode one, you can get a little bit more about the background story of my grandfather and my grandparents. But basically, I grew up in Philadelphia, Pennsylvania, and I would travel to Apalachicola, Florida every summer to spend the summer with my grandparents when I was a young child. And I had the task on weekends of helping my grandfather around the yard. He would cut the grass, hedge clip the hedges, etc. And I would have to go around and clean up after that. And I also had to go around and pick up any trash or debris that had been in the yard. And my grandfather was all about, again, structure and discipline. So one of the things that he did was he would go behind me after I completed the task, and if he found any pieces of trash left, he would deduct 25 cents from my pay, which was $10. So $10 minus 25 cents for every piece of trash that he found. And, the whole connection, the whole idea is that, small mistakes can have long-term costs. The other lesson was discipline and precision matter. And again, when we're talking about setting up a personal bank, the structure matters. And if you don't structure things properly, it can cost you. So, again, this whole concept, and one of the reasons why I was so excited to start this podcast is because it ties in so many ways to the lessons from my grandfather. So, let's go a little bit deeper into that. Most people have heard of life insurance, and most people have heard of whole life insurance, and a lot of people already have a policy. But the reality is that most are not designed for banking. And some of the common outcomes from that is that you have slow cash value growth, limited access to those funds that are growing within that policy, and higher setup fees in terms of conventional whole life policies versus properly structured whole life policies that are designed for infinite banking. The setup fees and the commissions that are paid to the agents or the strategists, advisors, are much less when it is designed for this for the banking features. So basically, when we say properly structured, what we're talking about a policy that's designed for early cash value growth. And cash value growth, first and foremost. That's what it's designed for. It's also designed so that you can access that capital and use it in very flexible ways long term. It's not designed for maximum death benefit only, like conventional whole life insurance or term life insurance. So the basic, through line in that is that design determines the function of the policy. So some of the core design principles that I just mentioned, for example, cash value focus, flexibility, efficiency, and long-term orientation. So I want to talk about that a little more. So starting with cash value focus. So early cash value accumulation. The whole idea of becoming your own banker so that you can have access to using those funds to take out loans for things that you might otherwise take out a loan for or finance in your day-to-day life, whether it be buying cars, whether it be down payment for homes, whether it be home repairs, home improvement, school tuition, etc. Things that you might put on a credit card, things you might take out a loan from a bank. When you become your own banker, you now can finance your life in that way. So therefore, you want your policy to be designed in a way where your cash value is accumulating as quickly as possible. So that's one of the focus. And also, you want to be able to use it sooner than later. Oftentimes, if it's not structured properly, you can't get access to those funds for months down the road. Whereas when it's properly structured for the banking function, you literally can get access to those funds within days of your policy going active. The next feature is flexibility. So, one of the core features that separates, and when we say properly structured, means that we're designing that policy to be flexible so that you can adjust your contributions at any time. So, rather than there being a monthly policy payment that is the same amount month in and month out, there's flexibility. There's a floor amount, and then there's a ceiling amount that you can pay just depending on life circumstances. Money might be tight some months and you may want to pay a little less, or you may have a little bit extra and you want to pay a little bit more. Well, being designed for this banking feature, that flexibility is built in, and you're not locked into some rigid structure like conventional term or whole life policies. And when we talk about efficiency, we talk about minimizing drag of costs. Again, I mentioned how if you're paying higher setup fees, higher commissions when you're, creating a conventional, traditional whole life policy, the costs that are involved in that can pull down the amount of cash value that you have access to early on. And that's not something we want to do if we're designing it for the banking function. So, that efficiency and how we're thinking about efficiency is really, really important. And also maximizing the usable dollars all plays into that design and that maximum efficiency when we're talking about using the policy for banking. And then lastly, we talk about long-term orientation. These plans and policies that are properly structured, they're built to last for decades. It's not just a short-term thing. You know, when we talk about term insurance, that's usually a 10 or a 20-year thing. That's short term, for example. But with a properly structured policy that's used for the banking feature in your life, it's designed to be there for you throughout the balance of your life, your entire life, so you can use it, for decades and not just a short term. So again, to contrast that to conventional policies where you have high base premiums, slow growth early on, and limited liquidity, the results are that a conventional whole life insurance policy does not function like a bank. Okay. It won't, serve that purpose for you. So that's the difference. And a lot of times, there's a lot of, info out there where people are saying that whole life insurance is not a good quote unquote investment. For one, everything we're talking about with infinite banking, as you've heard me say in previous episodes, is that it's an asset and it's not an investment. But also, the way that this is designed, they're not talking about a properly structured dividend paying whole life policy. There's a lot of educational, financial education advisors out there on the internet, and a lot of them, just don't like whole life insurance. And one of them who, again, I'll go into detail about this in another episode, but Dave Ramsey is someone that I, followed along in my 20s and 30s, read all his books, listened to his radio show often, and his concepts were really, useful and helpful. Um, but he's someone who he's not an advocate for whole life insurance. And what I realize is that when he's talking about whole life insurance, he's not talking about a properly structured dividend paying whole life insurance policy. Just to give you an example. And I'm going to talk more about Dave Ramsey in another episode, and how he doesn't like whole life insurance, and how I took that all in and still made the decision to move forward with this because I saw the value in it, even though he's someone who I've respected his, insights about personal finance for many years. When I learned about this infinite banking concept, the idea of becoming my own banker, it just made so much sense to me, that when I balanced the two, I still chose to move forward. So, the another really important thing to talk about with understanding all of this, and why it matters in terms of being properly having a properly structured policy for the infinite banking concept for becoming your own banker. Again, it's all about how soon you can access your money, how much control you have over your money, and the long-term performance. This is something that you can't just wing, and this is something that not just any insurance agent can help you with. You need someone who understands design, who understands how to design a properly structured dividend paying whole life insurance policy. And, someone that understands IBC and infinite banking. And there's something called the Nelson Nash Institute, where insurance agents who want to help their clients, or financial advisors who want to help their clients become their own bankers, where they can go and take a course and get certified to become a certified infinite banking concepts practitioner. And that's something that I've done. I've taken the course, I've passed the test, as a part of my journey and understanding this and learning this and wanting to implement it for myself, and also wanting to be able to help other people, take advantage of this strategy. So, so it's important that you work with someone that understands, and that is also why, if you work with someone like me or any of my colleagues in this space, we're always going to emphasize education first, because this is different than just conventional, traditional whole life insurance, or term life insurance. So it requires a level of education. And in the last episode, I talked about the book How to Become Your Own Banker, which I highly recommend reading if this is interesting to you. But also, like I say at the end of all of my episodes, that I have a library of resources for you that I can share with you, and I'll mention that again a little bit later. So, the key takeaway that I want you to take from this episode is that whole life insurance is a really, really powerful asset. And whether you're using it just to leave a legacy behind for future generations, I think that alone is something that everyone should do. But for those of you who want to leverage it for what it can do for you in the now, what it can do for you while you're alive, and how it can help you accelerate your savings, how it can help you accelerate your wealth building and serve as a foundation for everything else you do in terms of investing, etc., that's where it has to be a properly structured dividend paying whole life insurance policy in order to work for you in the now. So, I hope all of that makes sense. And drop any questions you may have in the comments, and I'll go into more detail or get you some resources to do just that. So, in terms of where we're going next in the next episode, I talked about both whole life and term insurance a few times in this episode. Well, in the next episode, I'm really going to break down the difference between the two. All right. So, once again, thanks for tuning in to another episode of Wise Man's Dollar. This show is designed to spark curiosity about how people become their own bankers using the infinite banking concept and properly structured dividend paying whole life insurance, which this episode was all about. If you want to go deeper, I have a private library of resources and videos that break this down in detail. including things most people never get taught about how this all works. Just email me at wisemansdollar@gmail.com and I'll send you access for free. If you enjoyed this episode, hit like, subscribe, and drop a comment in the chat about what resonated with you. And share this with someone you care about because wisdom grows when we pass it down. And remember, like my granddaddy always told me, any man can make a dollar, but it takes a wise man to spend it. I'll see you in the next episode.